is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 26th day of April. My pleasure to be here. Earlier on, I did Larry Pesavento show at 9 o'clock. So it was 9 a.m. Eastern time. Pleasure to do that. And at the time, I had finished the show saying I believe that we should have a fairly strong day today. If at between 11:10 and 12:35, the market is generally up, and the S&P is up more than about 8 points. Right now, the S&P is up 19 at 2658. The Dow is so the S&P is up 0.72%. The Dow is up 0.66% at 24,241. And the QQQs, that's the index 100, which has really been beaten down, is up 1.64%. Much better, but double percentage. So it's up at 161.28. Sorry, up 2.64, hitting the 9-period exponential moving average in the daily chart. That's strong resistance. It's a leg B to the upside in the 120-minute chart. What's really important about this is that within the context of the markets, the MACD in the weekly chart is still very weak, and the stochastic is down at 40%. It is not that great, but it's okay. Long balance volume is actually pulling back in the weekly chart. That monthly chart is still holding nicely above the 156's 9-period exponential moving average. So at 161.30, a lot is going to be told to us about the general market if the Qs are able by Tuesday. That's not Friday, it's not Monday, but it's Tuesday during the show. If the Qs are trading at 163.70 to 164.10, anywhere in that range, I need time. I don't want to have these one-day pops and failures. So it needs time, and it needs to build very, very steadily to the upside. We'll see how that works out. Meantime, the key support is 159. It closed below 159. Will be pretty negative in the next 2 days. Looking at the IWM, and it's up at this point. It is up 0.24. It is lagging. Remember, I've been discussing this for a little while. 154.58. There are a lot of reasons that people talk about the Russell 2000. Sometimes they're affected by the dollar. Sometimes it's oil. Sometimes it's the financials, because they are a real big mix of you say lower price, but these are still multi-billion-dollar companies. So as I look at it, the IWM is telling us it's stuck in a range. The Russell 2000, IWM has 156 to 157, strong resistance. Better hold 152.50, because if it closes under that, that's going to be very negative. Right now, it's up 42 cents at 154.62. Now, this takes me to the area that I wanted to spend some time on. I did so this morning. I'll do so again today. Gold is down 5 at 13.17, right on my target line of the 200-period exponential moving average of 13.16. It's at 13.17.5, making an arch formation, still within a trading band, but the closer it gets to 13.12, the closer it's going to get to that 13.05 200-period moving average in the weekly chart, and the MACD and stochastic are very poor. And what's happened is it ran up to the resistance in the gold contract, monthly continuous contract resistance, 3-4 times, and failed. And now it's sitting right on the 13.17, right just above the 9-period exponential moving average. If you understand things about moving averages, it's often that you'll find that a weekly 200 corresponds to something like a 9-period monthly. That's the way it works. This is a very key moment. So I'm looking at it, I'm saying, well, what would be moving up? And I'll tell you what's moving up. And for me, this is a surprise, because I did Larry's show, And then I did something I rarely do, but just every once in a while when I've really been working very hard, I take the time to go and have a game of tennis in between. So I squeeze in a set fairly nearby after Larry's show and just got back in time here. So I'm looking at this fresh, and I looked at it. The dollar was down 17 cents earlier on when I did Larry's show between 9 and 10. It is now up 37 cents at 91.59. And what I discussed is that very often in this particular pattern, the Chapman Wave Cup and Ladle, there's a breakout above the previous left side lip. This would be 90.93 late February, makes a cup formation, and then it breaks to the upside, and then it comes back and it does a retest. And that retest should be somewhere close to the lip on the left side, that breakout. What was the today's low? 90.96. It went within 3 cents of that peak B minus because it recycled. And now this leg D has gone even higher. Now, one of the things that is really important for me is that I mentioned 2 weeks ago that the coming week, that was last week, was a week that I'm anticipating could tell me a tremendous amount if there is a breakout in certain areas. So we are long the dollar. We've been long since the 6th of April, quite a bit lower, down 90.02. We're at 91.60 right now. And my anticipation was that if, and there are a lot of ifs here, which are turning out to be the real thing. So they were ifs. And what I'd say is, if gold is able to approach the 90.30s and then break into the 91.20s above the 90.93 high that was made on March the 1st, that would be very significant if you put it together. Now, that it's not one thing. People always say, oh, the rates are going to this or no. No. I think it's a combination of things. And what I'm looking at here is, you'll forgive me, I'm going to have to go through a bunch of things because it's a domino effect. Look at the TLT. The TLT right now is up 52 cents at 117.69, giving back a lot of earlier gains. If you look at the TBT, which is the inverse of the Lehman 20-year T-bond fund, this is already yields. It's pulled back, probably going to make a peak B, and it's a great peak B because it's under the previous high of 39.86 on the 21st of February. That was a peak D at 39.86. Pulls back sharply to just under 36, and now it's trading at 38.80, and the stochastic is holding steady at 92%. The MACD is good, and there's a particular pattern that I call the Chapman Wave squash. It's one of the reasons for all these decades that I've always put the stochastic above the MACD above the stochastic. So, and this is really bullish. And what it says is very often you get an acceleration to the upside when you get the Chapman Wave squash. You've got to have a whole bunch of things going together. And if that's the case, you go to peak A, then peak B, and a very quick C, and then the stochastic starts to pull back as it has a rest. That's the torque. And the momentum from the MACD, the moving average convergence divergence, takes the price eventually to a D. Whoa, a lot in there. Dow's up 167, S&P's up 19. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, getting back to our story, let me just, I'm finishing up this chart. I had a question about the dance. I'm doing the Chapman Wave notations. I'll be back, HTGE. It is called the Ranger Equity Bear ETF. Be back to that in a moment. Let's get back to our story. So, the dominoes, right? So, the TLT is suggesting that the greater weight, that is the WEIGHT, and the WAIT, that's time, has more a propensity to be declining, and it could take some time. But it is close to some kind of support, just as the TVT would have that resistance that I spoke about. So how's the picture forming? On the one side, you've got the dollar, which is not necessarily breaking out yet in the longer term, but currencies tend to have much bigger time frames in a trend. And the sideways trend, I think, is kind of completing for the dollar. There's a real good chance that the dollar, now look at the EUR USD. So keep in mind, we've got the breakout potential. Certainly in the daily, we've got a breakout. The weekly chart is just starting to move higher. I wouldn't call it even a breakout. It's positive. We've got yields, and we'll get to that. It missed by 2 cents, missed by 3 cents, 3 ticks yesterday, the 30-year, making that missing leg D. So we'll get to that. Now I want to go to the EUR USD, which is the euro-dollar currency pair. Here's the arch formation, lowercase h. Remember, we talk a lot about the dreaded H. Closing, if it closes under the low of the 1st of March, 1.215, it has within 2 days to break above it and close above it, or else it's going quite a bit lower, and it limits the upside, puts a cap on the upside. The weekly chart looks really very much like that's a failure pattern, but we've got Friday tomorrow at 4 o'clock to discuss that. Monthly chart is still pretty good. Look at the USD JPY. This is the yen, the United States dollar, Japanese yen currency pair, USD JPY, trading down 19 cents at 109.22. It's just snuck to an extension of leg D 104.448. 104.458. So it's got that leg D extension. MACD's good, stochastics at 92% in the daily. Now, the weekly chart, yes, a tremendous difference over a month in the histogram, the vertical lines, as the MACD just crossed positive for the first time since about December of 2017. Stochastic finally went from the single digits to 35%, and the RSI, relative strength, is rallying. It's tackled and gone above the 200-period exponential moving average. The monthly chart is fighting right here with a 9-period and a 200-period moving average, just about to cross it in the 109s. So far, very good. I do anticipate a little bit of backing and filling, but this is very good action. So you've got currency, you've got yields. Let me show you this in a moment. Yeah, right here. The yields. Look, we went within 2 cents. Now, is this going to be a peak C1, peak C2 in the weekly chart of the Chapman Wave? I'll give more of it to my subscribers to my opening call, as I do on the weekend starting Saturday. But in the meantime, look at this. 5-year, the cyan has screamed to the upside. It's at 2.821. The 10-year screamed to the upside. It's at 2.996. And the 30-year, the white one, the cyan, the white one's the TYX, 30-year T-bond yield, is 31.80, 3.183. 3.222 starts leg D. This is really close. Looking at it now, let me go to the daily chart. I want to show you something very interesting. So we'll go to the TNX. And the TNX is at a peak C. What is the TBT? In a peak B. What is the TYX daily? It's in a leg C. So this is the way I'm looking at it. There is a really good chance that within a week or so, we should be making a higher high in these yields. And if that's the case, it'll at least for the shorter term, it could mean that there's some support for the market. Higher yields actually should technically be a big positive, because it's saying that there's a demand, and that demand is what you traditionally like to see. But if the TLT really explodes to the upside, in other words, if yields at any point start to turn down sharply, and let's use the TNX, which is the one that most people look at. I mean, this is most institutions. The TNX trading right now at, if I can just move this right here. There you go. TNX is trading at 29.96, down 28. If the TNX suddenly starts to trade under 28.78, somewhere around there, that's going to suggest that the weekly chart could be seeing some weakness, WEAK, and if that's the case, there could be a sideways trading band for maybe a month, 6 weeks. But I can just tell you this: the reason why I mentioned the TLT rallying sharply is that would indicate to me that the general market is starting to pull back sharply, because money on a shorter term basis could well flow from the insecurity of securities, equities, into the so-called security of bonds. Okay, enough with that. Crude oil. Crude oil right now is trading at down 25 cents to 67.80. When I was on a Larry show, it was moving higher, and there's a chance it's at a peak G/C in the Chapman Wave methodology. There's a good chance it'll go to D. It's just in this trading band, high-level consolidation. I would not be shorting crude oil. I think it's making a high-level consolidation. So that leads me to the question, what's the IYT doing? It's down 2 at 186.90. Why? Because the XAL, I mean, there were some earnings reports today, and I think that there were some big disappointments. Down 1 in the XAL at 108.50. Whoa, this is not good at all. So if the transports aren't going to help, I think that we're looking at the consolidation that began January the 26th of the Dow and the S&P continuing for a while yet. And if you're looking at CSX, it's down 42 cents, having made a peak D in the Chapman wave. I think this is like crude oil. It's just high-level consolidation right now. CSX, transportation, rails. I'm missing high-grade copper, HG. I think I've got everything. Yes. High-grade copper, I spoke about this during Larry's show. I said this triangle to me is important because it has a resistance, but the rule for me of triangles is wedge formation, sideways triangle going to an apex after a, what they call a flag pole, and you got this little pennant flag, is that yes, you can break to the upside, but the rule of thumb is that it always goes to the top, and if you break on the support, you go to the bottom. I say, no. The pattern I'm looking for in this rectangle formation is that if anything, it will make an arch formation. But high-grade copper looks to me like it's stuck, and it's probably going to see some weakness over the coming days. But I don't think it's going to break down at all at this point. Dow's up 211, S&P's up 23. We'll be back. Basil Chapman, Tiger Technicians out.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're up 210, up 23, what's the Qs? The Qs right now should be having a pretty good day because they were so beaten down. The SMHs are rallying somewhat, not as much as you would think. So the comp index is up 107. Good, very nice. Okay, so we're looking at a question here. Lloyd's Banking Group, or Lloyd's of London, I guess it is, trading at $3.63. What was the question? Sandy wants to know, looking for an entry. Thank you, Sandy. So, Sandy, this is what I'm going to say to you. The chart, the daily chart looks absolutely awful. The weekly chart looks terrible, and the monthly chart is not bad. So you need to look at time frames. I don't know what your time frame is, but it has made a peak D in the monthly chart, trading at $3.63, unchanged right now. You know, when a bank, especially Lloyd's of London, they were the big insurers, remember? I mean, it must be the same one. And they had huge losses one year. I don't remember which year it is. I would say to you for a bank stock, it's kind of more insurance, I think, than bank, but it's bank. Financials, let's put it that way. At $3.63, wow, there is something not right at all. However, there's a gap down from 3 days ago. Well, many gaps down because it's an overseas, it's an ADS overseas company. And the stochastic did go to 7.82% this morning. The MACD looks terrible. The weekly chart is lousy, but that monthly chart says, you know what? It could hold okay. So this is what I'm going to say to you. You obviously kept your eye on this. I don't see if you any scan. I'm not sure how it would have picked it up. So you must have had your eye on it and said, hey, this is something that might be ready for a bounce. On a percentage basis, going for $3.62, even just to fill the gap of recently, let's call it $3.69 at 6 cents. That's already we're talking, we're talking big percentage. We're talking about 9% would be about 16%. So this is what I'm going to say to you. At $3.63, if you're prepared to set aside a little money, I wouldn't get carried away at all. I would get carried away under other conditions, but not the way it's gone down and broken the left side low. Now, the low of the 1st of April, is that the 1st of April? The 2nd of April at 366, it has to push above that. It has today or tomorrow to do that. If it doesn't, it's kind of stuck. So here's my recommendation. Treat it as at least hopefully a non-expiring option, call option. In fact, it looks to me like it could expire at some point bankrupt. But I'm just going to say you've kept your eye on it. Right here at 363, I would start a position. This is just for you, no one else, because there are different constraints. I'm just saying, that was your question. Where's an entry? You obviously are looking to get in. Right here, 363. I would give it time. I wouldn't give it price. I personally would give it price. But I'm saying that if you get in at 363, if it closes under 360 or 359, it's time. It'll probably come back and hit 363, but you might be waiting a little while to do that. If you're prepared for that, start a position here at 363, and the only way I would play it. I wouldn't trade it. I wouldn't play it. I wouldn't hold it unless 3 things happen. One is it cannot take out today's low. That's the way I would look at it. This has to be a reversal candle, and I want to see the high of yesterday of 366 taken out by Monday, at the latest Monday afternoon. It doesn't have to hold. It just has to take it out, but it has to hold above 363 where it is right now. If it takes it out and then it comes back and goes under 363, I say, woohoo, watch it closely. But it is a small position. Where would I add to it? I would add to it if in 3 weeks' time it hasn't taken out today's low of 360, and in fact it's tried to get to 370, the 200-period exponential moving average, and that gap gets filled, and within 3 sessions after the gap gets filled, meaning the low of $3.68, it's above that, it doesn't even look back and hit 368 again. And it starts to trade nicely. It doesn't have to break out, but it trades nicely above 370. If that happens, I think you've got yourself an ideal entry. And then we will start to look at, well, how would you add to it? Or is this going to be an H pattern that comes back and retests? A lot depends. It's got the 2-day rule on how it closes today. I'd give it 3 days because it's just had such a big decline that it needs maybe an extra little bit to get momentum to the upside. Hope that helps you, but don't get carried away. If you want to add to it, we'll talk about it. Just email me again later on if certain of these parameters are met, as we discussed. Why? Because if this thing can get to the 377 level without breaking under 360 in the next 2 weeks, that stochastic is going to have a rising stochastic, a divergence between the price going down this week, price having made a low about 3 or 4 weeks ago. And that is a positive. And the monthly chart isn't broken down yet. So, okay, I hope that helps you. Next question I had was hedge. HDGE. HDGE is hedge. What did I say it was? Come on. HDGE. Trading at $8.34. So the question was, is hedge the Ranger Equity, what did I say it was? Ranger Equity Bear ETF. Is that going to give us a sense of the intermediate term outlook? I'm going to talk about that. I want to go straight to Jerry in the back bay who's on hold. Hi, Jerry. How are you?
Yeah, I'm interested in Visa.
Okay. So
I have a trading position, and I'm trying to think of when to take profits because it sort of broke out after earnings.
So, Jerry, this is the one I think we spoke about. It was acting well. It said it could chop around, but overall the weekly chart was starting to look quite good, and it had had quite an impressive run when we spoke. And you're still holding it. Is that correct?
Yes.
Okay. So Visa, folks, is trading at up $6.25 at 127.46. A leg E in the monthly. Absolutely terrific technicals in the monthly chart. Weekly technicals were looking poor, but it held this very strong red line that I had drawn in as key support level. Held for 3 weeks above the 9-period moving average. This is a brand new. I don't see how I can call it anything else. This is a leg C, and this is the dichotomy. This is the confusion that I'm hearing from many people in the market. Some things are working so well and others are not. And within the same sector, you've got some stocks doing beautifully and some stocks looking horrible. And this is a very good example. So this is in the XLF, and the XLF, which is the S&P Select Financial. Where did that go? Oh, I typed it in the wrong place. The XLF right now, let me do this again. XLF is trading at, break came up quickly. Is up a full penny at 27.66. I think we need to talk about this because, Jerry, I think you've got yourself something that's saying then the economy, perhaps rates, perhaps Visa is doing extremely well because of rates. I'll be right back with Jerry.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. So we're with Jerry in the Back Bay, Boston Back Bay, and we're looking at Visa, trading at Visa symbol 127.55, up 6.34, up 5.23%. Outstanding move, because yesterday it closed in the 121s, and now it's up at the 127s. But 127 is an all-time high. So, Jerry, I'm going to, there's very little to say. Out of American Express, MasterCard, and Visa, you have the absolute winner here. This is a stock that is suggesting by its action that the way this is the one visualization that we can make that says their costs related to the percentage that they make on whatever it is that they are, with their debit cards, credit cards, or whatever it is that they're implementing, it must be working fantastically for them, even better than American Express and MasterCard.
Yeah, American Express is different. American Express makes loans, so that they can take losses. Visa just makes money when you buy make a transaction. They get like 50 cents, and so they don't take any loss risk.
Is it only on transactions? Do they not, for a period of time, have the loan, the amount that is? No.
So when they click a Visa card, they get a little percentage in there.
Really?
So it's got a high multiple. It's like 25 times earnings. So that's the risk that it gets caught up in the downswing of the high growth stock.
Yeah, but this has the look that I'm anticipating at some point this year, later on, Goldman Sachs should have, because Goldman Sachs since 1929 has been a player in every single move. This is the most lackluster it's been ever since there were the Senate hearings way back. They have been laggards, but you remember there was a year where they said they had 3 days or something of trading losses. I don't know, something amazing. So I'm looking at this, and I think that what it's saying, just based on my weekly chart, is that out of the 3 card companies that are in the Dow, 2 of them, Visa and MasterCard, are in the Dow. Oh, wait a minute. American Express is in the Dow as well. Wow. Oh, no, it's MasterCard that is not. Okay, so it's American Express and Visa.
MasterCard is not, but they do the same thing as Visa. So they have a very high multiple too.
Except that their multiple seems to me that they're struggling some. If you look, the monthly chart is great. Weekly chart's improving. They've been influenced by the Visa announcement today. It's up 6 at 178, but it is not. You're right, but 182 is the round number all-time high. So, and it's lagging. I'm just saying that Visa to me is the one that's getting the most benefit. My thinking was it was rates, but you say no, it's transactions. Wow, that's a lot of transactions, and it's doing very, very well.
So would you lighten up on it here for pullback?
No, let me tell you the way I would do it. Because it's at the high of the day. You see what normally happens with these stocks? We've seen that with so many. Let me just see if Facebook is a good example. Facebook. No, it's not a good example. But what we've seen let's see what Boeing's doing. It's probably the same thing. Yeah, look at Boeing. You see, Boeing had that announcement. It had a big spike. Didn't take out the left side high that was made the previous day. And now it's in a way, it's kind of struggling. But Visa is holding at the highs. It means that there are fresh buyers. This is the way I would do it. Because you were thinking of, is this a little overbought so that I might want to take something off? Why don't you let me go to the 120-minute chart. You see, there are two ways of doing it. Either here at 127.38, you say, hey, this is fantastic. It's done more than I expected. I'm not going to be greedy. I'm going to be rational. I'm going to take something off. Or you could say, look, for 3 points, 124.20, I'd have a stop of 3 points, and I'd have it as a trading stop because I think that the general market has a chance to rally into maybe even Monday or Tuesday. And Visa should, that's my thinking right now, Visa should participate. So you might be able to get 129 if you stopped out using a 3-point stop, if it's able to get to maybe the 131 area. So think about that. I mean, you might say,
that's good advice. Yeah.
For 3 points, you might say, if I'm going to get out, I'd rather get my money now than risk 3 points for nothing because it might have struggled to get to the 132 area. But I'm just saying to you that it's acting so well. I see some further gains because there's leg C in the weekly chart. So you know what? I would even split it. Why don't you take something off right now, not as much as you were thinking, have a trading stop on the rest, and you've got the best of both worlds, and keep your call because that so far is still looking really good.
Thank you very much. I appreciate it.
Thank you very much for calling. Always enjoy it. And congratulations. Very good position play, Jerry. Congratulations. So, folks, let's just do this because before the break comes, I want you to just get to that. I'm going to spend a little more time tomorrow talking about my bigger picture. Hedge is at 8.34, and it is the Ranger Equity Bear ETF. I'd like to go into it a little bit more before I can discuss it. It's made a peak D already in the weekly chart, leg A, in the monthly, and what it's saying, being way above, let me just make that softer, way above the support of 820 to 810. It says that, like the VIX index itself, look at the VIX. Here we go. The VIX index right now is at 16.97, way off the 9s, the 11s, the 10s and the 9s and the 8s, the 7s from months ago. So it's saying that there is still a lot of buying of I wouldn't even say calls, I would just say that there's a lot of buying of the volatility index as some kind of a hedge, and the HDGE is some kind of a hedge, obviously. So let me do this tomorrow. I will take a little time tonight to discuss it tomorrow, to give a picture that I'm looking at that suggests that there is still an intermediate term sell on the Dow, the S&P, and the Qs, and the IWM. I haven't come out of that yet. That is still the picture I'm looking at. So I had a very good question yesterday. I didn't get to answer it. I'll start to answer it now. And the question is, it came in this morning. If this is a coda phase, meaning a coda, coda is a wrap-up and ending, but coda is if it's a Beethoven coda can end the piece by actually adding a whole nother piece to it. It takes all the different ideas. It has a couple of extra ideas, and then it has a wrap-up. And I think we're in the last third of this coda phase. It could last a while still. And does it say we're going to crash and burn? No, I think there's a lot to go on. And what I really am looking at is that the internal low of the Dow, February the 9th, is the 23,344 level, is still, sorry, the internal low is 23,368, which was retested 4 weeks ago at 23,344. That is a residual low. But I think that aftershock, we can have some other aftershocks, and I'm going to talk about it in the rotational aspect of this market. Basil Chapman, Tiger Technicians out.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone. Don't forget, you got Steve coming up straight after this show. You got Dave coming up after Steve's show. You got Tom O'Brien. And then today being Thursday, you got Andy Hex. Great programming. Okay, XLP, I was asked about this. XLP is S&P Select Common Staples Spider Fund, trading at 50.44. This is really tough. I was discussing this the other day with some people about retail and what's happening and malls and all sorts of things like that. I think this is one of those things where I need to do a webinar on the whole aspect of malls and shopping and stuff that really is going to be very important coming out of this huge move down. They're going to, remember, December with all those retail stocks. I don't think it's ready for a big move to the upside, but at the same time, there is evidence that some kind of a base is trying to form. If you look at the XRT, let's go there right now. XRT, oh, don't type it there. Oh, quick, this is the final segment. So I'll deal with this tomorrow because it really is important. XRT, not bad. kind of holding its own. That's the S&P retail, RTH, which is the market vectors retail. A little bit better. Yeah, let's do that tomorrow. We'll talk retail tomorrow. And a question about, Mo came out with earnings, and boy, it's got smacked. I mean, this is, tobacco, it's a domestic, Altria. Yeah, not good, down $1.50. Yeah, let me talk about that tomorrow. A question about Caterpillar. Caterpillar is trading up 31 cents after being smacked at a peak D. Yeah, I think that these heavies are just, I'd said before that the stocks in the areas that had the greatest incline for the last 2 years are now taking a well-earned breather. Caterpillars in that category. So for my subscribers, we had a very interesting thing, a leg D. I always hate to buy something in a leg D, but this was absolutely enticing, and the stochastic and MACD were looking very good. We were very fortunate. It closed yesterday at about $10.10. We bought it under 10 today. It hit $10.85. Now it's giving back some. But boy, what do you do with a leg D? I had a plan. Maybe tomorrow I'll talk about what happens when you get a very strong move. You'd like to get on board, but you really missed the best entry. Let's do that tomorrow during my show. Have a great day. Stay tuned for Steve. I'll be back tomorrow. Check out my opening call. Thanks for being here.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.